Welcome to our exploration of one of the most legendary figures in investing, Warren Buffett. Affectionately known as the Oracle of Omaha, Buffett's reputation as a financial genius is well earned. His investment strategies have not only stood the test of time, but have inspired countless investors worldwide. In this video, we'll delve into the core principles that make his approach so effective, particularly for young investors navigating the complex world of finance. Buffett's journey is about more than accumulating wealth. It's about understanding the market and making informed decisions. His strategies emphasize long-term growth and value, making them accessible even to those new to investing. Understanding these foundational concepts can transform your financial future. So, whether you're just starting out or looking to enhance your investment portfolio, Buffett's wisdom provides a roadmap to success. Stay with us as we uncover the secrets behind his legendary status and how you can apply these insights to your own investment strategy. Join us on this educational journey where knowledge becomes your greatest asset. As we embark on this journey into investing, it's essential to recognize the hurdles many young investors face. In today's fast-paced financial landscape, understanding investment strategies can feel like deciphering a foreign language. One significant challenge is financial literacy, a crucial skill that many young people find lacking. Without a solid foundation in financial education, navigating the complexities of investing becomes an uphill battle. Young investors often feel overwhelmed by jargon and intricate details, leading to hesitation and missed opportunities. But fear not, for this video aims to illuminate the path forward. By exploring Warren Buffett's renowned strategies, we'll break down barriers and introduce strategies that can empower you to take charge of your financial future. Whether it's understanding the importance of long-term growth or learning to identify value in investments, let's dive in and start unraveling these challenges together, paving the way to smart and successful investing. Up next, we delve into Buffett's core investment principles and how they can transform your approach. Welcome to the world of Warren Buffett's investment strategies. Known for his long-term vision and value investing, Buffett's approach is both accessible and effective, especially for young investors. At its core, Buffett's philosophy emphasizes patience and the pursuit of intrinsic value. Rather than chasing quick profits, he focuses on the enduring potential of businesses. Buffett advises investing in companies with strong fundamentals, sound management, and sustainable growth prospects. This strategy builds wealth over time and minimizes risk. His mantra, buy quality at a fair price and hold on to it for the long haul. For young investors, this means looking beyond market noise and focusing on businesses that can thrive over decades. It's about understanding that real wealth accumulates through consistent, disciplined investing. And it's not just about picking stocks, it's about investing in what you know and trust. Through this lens, Buffett's strategies empower you to make informed decisions, fostering confidence in your investment journey. As we delve deeper into these principles, remember, patience and knowledge are your greatest allies. In the next segment, we'll explore the power of compound interest and how it can transform your financial future. Compound interest is a powerhouse of financial growth, often described as the eighth wonder of the world. It's a concept Warren Buffett has masterfully harnessed throughout his illustrious career. At its core, compound interest is about earning interest on your initial investment and then earning interest on that interest, creating a snowball effect of wealth accumulation. Imagine planting a seed that grows into a tree, which then produces seeds of its own, leading to an entire forest over time. Buffett saw the potential of compound interest early on, using it as a cornerstone of his investment strategy. By reinvesting his earnings, he allowed his wealth to multiply exponentially. This principle demonstrates the power of patience and long-term vision in investing. For young investors, understanding this concept can be a game changer, turning small, consistent investments into significant wealth over time. As we delve deeper into Buffett's strategies, remember that compound interest is not just a tool for the rich. It's accessible to anyone willing to start early and stay committed. So, are you ready to let your investments grow like Buffett's? Let's explore more strategies that can guide you on this financial journey. Warren Buffett, a name synonymous with investment success, offers a timeless strategy for young investors. Invest in what you know. But what does this mean? Simply put, it's about choosing companies and sectors you truly understand. Imagine having insight into how a business operates, its market dynamics, and its potential for growth. This familiarity doesn't just boost your confidence, it minimizes risk. Buffett himself has consistently invested in businesses he understands deeply. Consider his long-standing investments in Coca-Cola and American Express. These are companies with transparent business models and enduring consumer demand. By investing in businesses that align with your knowledge, you create a foundation for informed decision-making and strategic growth. For young investors, this principle is particularly empowering. It turns the daunting world of investments into something approachable and manageable. You're not just gambling on numbers, but making informed choices about the future. Remember, the key is not to chase every trend, but to focus on clarity and understanding. As we continue, we'll explore how Buffett safeguards these investments with his margin of safety principle, ensuring even greater resilience in the unpredictable world of finance. In the world of investing, risk management is paramount, and that's where the margin of safety principle comes into play. Originated by Benjamin Graham and embraced by Warren Buffett, this concept is central to safeguarding your investments from the unpredictable swings of the market. Imagine buying a stock for less than its intrinsic value. This gap acts as a buffer, a cushion against errors in judgment or unforeseen downturns. It's a protective measure, ensuring that even if things don't go as planned, your investment remains secure. For young investors, understanding this principle can be a game changer. It means not just chasing after high returns, but also valuing security and stability. Buffett's success isn't just about picking the right stocks. It's about minimizing risk through strategic foresight. By embedding the margin of safety into your investment approach, you're not just investing money, you're investing wisely and sustainably. This strategy aligns perfectly with the foundational goals of financial literacy, empowering you to make informed, confident decisions. As we explore further into Buffett's philosophies, let this principle guide you in building a robust, resilient investment portfolio. Next, we'll delve into how learning from mistakes can transform your investment journey. Warren Buffett, a name synonymous with investment wisdom, believes in the power of learning from mistakes. For him, errors are not setbacks, but stepping stones towards mastery. Young investors can draw inspiration from Buffett's openness to acknowledge past missteps. He views each mistake as a chance to refine strategies, adjust approaches, and ultimately enhance decision-making skills. This mindset fosters continuous growth, essential for navigating the ever-evolving world of investments. Buffett's journey is a testament to the value of lifelong learning. He encourages investors to embrace their errors and extract lessons that propel them forward. Through this process, mistakes transform into invaluable assets, shaping a more resilient and informed investor. By adopting Buffett's perspective, young investors can cultivate a mindset that sees challenges as opportunities for development. As we delve deeper into Buffett's strategies, remember his lesson on growth through reflection. Up next, we explore how his philanthropic vision complements his investment philosophy, highlighting the broader impact of his principles. Join us as we continue unraveling the wisdom of the Oracle of Omaha, guiding you towards a more informed and empowered investment journey. Warren Buffett's philanthropic efforts are as legendary as his investment strategies. Known for his belief in giving back, Buffett's approach to philanthropy is deeply intertwined with his investment philosophy. He views both as long-term commitments, aiming to create lasting impact. By pledging the majority of his wealth to charitable causes, Buffett exemplifies how philanthropy can be a powerful extension of one's investment journey. His giving pledge, inviting other billionaires to commit to philanthropy, reflects the same principles that guide his investments: strategic thinking and patience for enduring results. For young investors, this integration of philanthropy and investment offers a unique lesson. Success isn't just measured by financial gain, but also by the positive difference you make. Buffett's story teaches us that by investing in both the market and society, you can achieve a legacy that transcends profit. This segment invites us to consider how our own investments can contribute to a better world, aligning personal success with societal benefit. As we explore Buffett's philanthropic vision, we see a roadmap not just for financial success, but for meaningful change. In our next segment, we'll delve into how young investors can learn. As young investors, the journey can be daunting, but Warren Buffett's timeless strategies can light the path forward. By focusing on value, understanding, and long-term growth, you can transform complex concepts into actionable steps. Start by identifying businesses you truly understand and believe in. This not only reduces risk, but also boosts your confidence in your investments. Embrace the power of compound interest. Even small investments can grow substantially over time when left to compound. Use modern tools like financial apps and online resources to track and manage your investments efficiently. Learn from each decision and mistake, just as Buffett does, using them as stepping stones for growth. Remember, the margin of safety isn't just a concept. It's a crucial shield against market volatility. By applying these principles, you're not just investing in stocks or companies, but in your future. As you embark on this journey, keep these strategies close and watch your confidence and portfolio grow. In our final segment, we'll explore how you can start investing today, using Buffett's strategies to build a prosperous future. Let's take that step together, turning knowledge into action. As we reach the end of our journey through Warren Buffett's investment philosophy, it's clear that his strategies offer a timeless roadmap for success. From understanding the power of compound interest to focusing on familiar investments, each principle is a stepping stone towards financial literacy and empowerment. We've explored how the margin of safety can protect your investments and how learning from mistakes can fuel growth. By integrating these strategies, you can not only enhance your financial acumen, but also build a secure future. Now it's your turn to take action. Whether you're just starting or looking to refine your approach, these insights provide a solid foundation. Remember, successful investing doesn't happen overnight. It requires patience, knowledge, and the courage to start. So, embrace Buffett's principles, adapt them to your unique circumstances, and embark on your investment journey today. Empower yourself to invest in your future with confidence and clarity. Thank you for watching. If you found this video helpful, don't forget to like, share, and subscribe for more insights on mastering the world of investments. Together, let's continue to learn and grow towards financial independence.